What is the December effect on the Indian stock market looking at Nifty Indices? Have you noticed that the Indian stock market often does well in December? It's almost like the market catches the festive spirit. This is called the December effect, and today we are going to explore why December is often a good month for the markets. I am Chakrivardhan, and in this video we all look at past trends, which sectors do well, and what drives this December performance. Plus, I'll share what you as an investor can learn from it to make better decisions for 2025. If you enjoy videos like this, don't forget to subscribe to Prime Well for more insights like this. Historical trends. Let's start with the numbers. Since the year 2000, the Nifty index has closed higher in December 17 out of 24 times. That's an impressive 71% possibility of positive returns. Some standout years include 2003 gains of 16.4%, 2020 a strong 7.8%, 2023 another stellar year with 7.9%. These aren't just random spikes. They often coincide with favorable macroeconomic conditions, strong corporate earnings, and overall positive sentiment in the market. But of course, there have been exceptions. In years like 2011, minus 4.3%, 2014, minus 3.6%, and 2022, minus 3.5%, external shocks or domestic challenges brought the markets down. This tells us that while December is usually strong, it's not immune to setbacks. So what's behind this trend? Let's look into it. What drives December's performance? December isn't just another month for the stock market. Several factors combine to make it stand out. Portfolio rebalancing. Think of institutional investors like mutual funds and FIs. December is when they rebalance their portfolios to meet annual performance goals. This rebalancing often involves buying more stocks, which drives up demand and prices. Festive cheer. December coincides with India's festive season. Festivals like Diwali and Christmas lead to increased consumer spending, boosting corporate revenues. As companies post strong earnings, investor confidence grows, pushing the markets higher. Foreign investors' activity. Historically, FIs have been net buyers in December, adding significant liquidity to the market. Their performance often amplifies the upward trend. Economic recovery cycles. In certain years like 2020, post-pandemic recovery and government stimulus measures played a key role in sustaining the December rally. These factors come together like ingredients in a recipe, creating the perfect mix for a strong December. Sectors that benefit the most. Not all sectors perform equally well in December. Over the years, certain sectors have consistently outperformed. Consumer goods. The festive season drives higher demand for consumer products, leading to increased sales and profits. This directly boosts the stock prices of companies in this sector. Banking and financial services. December is a busy time for banks with increased lending and year-end spending. This surge in activity translates into better performance for banking stocks. IT. Global companies often finalize budgets and renew contracts in December, benefiting Indian IT firms. This sector sees a surge in business activity, improving earnings expectations and driving stock prices up. These sectors aren't just riding the December wave, they are shaping it. Winners and losers. December performance by Nifty Indices 2012 to 2023. When we look at specific indices, the picture gets even clearer. Top performers. Nifty Metal. Average gains of 4.37% driven by strong demand and cyclical trends. Nifty Realty. Growth of 3.24% reflecting renewed interest in the real estate sector. Nifty IT. Consistent gains with an average of 2.75%. Underperformers. Nifty Infrastructure. Struggled with growth, posting just 0.65% average gains. Nifty Pharma. Modest performance at 0.87%, often facing regulatory challenges. Nifty FMCG. Average growth of 1.14%, reflecting its defensive nature. This contrast highlights the importance of being sector smart during December. The volatility factor. December isn't always smooth. While December is known for positive returns, it's also one of the most volatile months of the year. A study from Pondicherry University found that the BSE Sensex showed higher volatility in December compared to other months, except in rare years like 2012. Why is December so volatile? Festive spending. Increased consumer activity during festivals like Diwali and Christmas creates ripples in the economy. Investor optimism. Many investors feel bullish about the upcoming year, leading to higher activity levels in the market. Rumors and leaks. Around this time, rumors about government policies or company strategies can stir up uncertainty. Volatility isn't necessarily bad, it just means December offers both opportunities and risks. How December stacks up against other months. Now let's compare December to its neighboring months, November and January. For the Nifty 500 index, December average return is 0.767%, lower than November's 1.565%, January's 1.494%. While December delivers positive returns, its higher volatility makes it a riskier month compared to November or January. What about December 2024? Looking ahead, the December effect seems likely to continue in 2024, but there are some factors to watch. RBI moves. The RBI has cut the CRR by 50 basis points, releasing 1.16 lakh crore into the banking system. This move should improve liquidity and boost market sentiment. While the repo rate remains unchanged at 6.5, anticipated rate cuts in 2025 could further benefit the markets. Sectoral opportunities, consumer goods, IT and banking are expected to remain strong, especially during dips. Challenges ahead, the RBI has revised its GDP growth forecast for FY25 to 6.6%, down from 7.2%. Inflation concerns remain high with food prices and supply chain disruptions driving up costs. Final thoughts, the December effect is real, but it doesn't always happen. History shows that December can be a great month for the markets, but it also has its risks. As an investor, it's important to stay updated, focus on sectors that usually perform well, and be prepared for any ups and downs. Are you ready to make the most of this December? Let me know in the comments. Thank you.